Hey everyone, welcome back to Corporate Decoder, the place where we decode those often very complicated corporate filings. Today we're diving into a report that has some seriously interesting, let's say, financial gymnastics happening. Get ready for 21 Capital Incorporated's latest quarterly report. Where things are, well, let's just say they are definitely developing. And before we get too deep, if you believe knowing where your money is actually going matters, hit that subscribe button and join our Discord community. The link is right there in the description. Alright, so what we've got here is a look at 21 Capital Incorporated's finances up to the 30th of September 2025. Now, the first thing that jumps out is this explanatory note, which basically tells us a big merger or business combination happened. They merged with something called 21 Assets LLC and Cantor Equity Partners Inc. This is a really big deal, and it affects how we read these numbers. The report itself covers two parts, the successor company, which is 21 Capital Incorporated, and the predecessor, which was 21 Assets LLC. Think of it like this. 21 Assets was the main operation, and 21 Capital Incorporated was the new parent company formed for this merger. Let's peek at the balance sheets for the successor, 21 Capital Incorporated as of the 30th of September 2025. The total assets are big fat zero, liabilities are also zero, and stockholders deficit also zero. This looks a bit strange, doesn't it? It is because this is a brand new shell company, really just created on paper for the merger, and has no real assets or liabilities yet before the actual business combination closed. It is like an empty stage waiting for the actors to come on. Now, if we look at the statement of operations for this successor company, we see a net loss of $57,798 for the 3 months ending the 30th of September, 2025. And for the period from its inception in March 2025 to the 30th of September, 2025, the loss is $65,554. This is mainly general and administrative expenses. Again, not surprising for a company in its very early formation stages, essentially just setting up the paperwork. But here is where it gets more interesting. Let's look at the predecessor, 21 Assets LLC. This is the company that was actually doing business. As of the 30th of September 2025, they reported total assets of $823,830. That is made up mostly of cash, about $808,230. They had liabilities too, totaling $687,282. What is important here is that they have actual cash on hand, and importantly, a positive net working capital of $136,548. That is a much healthier picture than the successor entity. Looking at the operations for 21 Assets LLC for the 3 months ending the 30th of September 2025, they had an operating loss of $656,070. For the period from their inception in April 2025 to the 30th of September 2025, the loss was even higher, $1,063,452. These losses are mainly from general and administrative expenses and some sales and marketing costs. This shows that even though they had cash, they were spending money to set up their operations. Now, let's talk about this business combination in more detail because it is the core of this entire report. The document explains that on the 22nd of April 2025, they signed an agreement for a business combination. This involved 21 Assets, 21 Capital Inc., and other entities like Cantor Equity Partners, Tether Investments, and Bitfinex. This was a really complex deal involving mergers, stock exchanges, and private investments, often referred to as a PIPE. They raised a massive amount of money through these agreements. For instance, they sold convertible notes totaling $340.2 million, with an option to buy another $100 million. On top of that, they had equity investments like the April equity PIPE, where investors put in $200 million, and a June equity PIPE for another $165 million. This was a total of hundreds of millions of dollars being raised to fund this combined entity. This is a crucial accounting point. The report states that the business combination was accounted for as a reverse recapitalization. In simple terms, this means the company that was acquired, in this case Cantor Equity Partners, is treated as the acquirer for accounting purposes, even though it was the other way around in terms of who bought whom. So, the financial history you see here is mostly from 21 Assets LLC, the company that brought the actual business into the deal. Looking at liquidity, 21 Capital Incorporated, the successor, had zero cash and a deficit of $65,554 as of the 30th of September 2025. This raises a substantial doubt about their ability to continue as a going concern, meaning they might not have enough money to keep operating for the next 12 months. This is a serious red flag. The report notes they needed to raise additional financing, which they intended to do through issuing more stock. If they can't get that money, their business could be in big trouble. However, the predecessor 21 Assets LLC was in a much better position. They had over $808,000 in cash and a positive net working capital of $136,548. They also faced similar going concern warnings, but their immediate cash position was much stronger, likely due to the capital raised through those PIPE deals mentioned earlier. The management discussion section really highlights the plan. They are focused exclusively on Bitcoin, related business lines. Their strategy involves accumulating Bitcoin, managing their Bitcoin holdings, and developing educational materials to boost Bitcoin literacy. They plan to generate revenue through subscriptions, licensing fees, and sponsored partnerships for their educational content, and eventually Bitcoin-centric financial services. Now, this is where the real insights emerge. 21's future is tied directly to Bitcoin's price. They've adopted a new accounting standard, ASU 2023-08, meaning their Bitcoin holdings are revalued at fair value each reporting period, and changes are recognized in net income. This means fluctuations in Bitcoin's price will directly and significantly impact their reported profits or losses. So if Bitcoin goes up, they look good on paper. If it goes down, they look bad. It's a direct financial link to the volatile crypto market. They openly admit their business is heavily dependent on Bitcoin's price. This is their core asset and their main driver for financial results, and the value of their reserves. They've acquired Bitcoin and plan to buy more, but every price swing on the market directly hits their bottom line. Another huge factor is regulation. The report stresses that clear rules on Bitcoin's legal status, accounting, and taxes are critical. Favorable rules could help them grow, but strict ones could seriously hinder their business. This is a constant risk and something they'll be watching very closely. Looking back at 21 Assets LLC, their financial results show a clear picture of a company in its early stages. For the period from the 17th of April 2025 to the 30th of September 2025, they had a net loss of over $1 million. This wasn't due to poor sales because they hadn't generated revenue yet, but rather from administrative costs and setting up their marketing. They were spending money to build the foundation for their future Bitcoin-focused operations. On the other hand, the successor, 21 Capital Inc., had a much smaller loss of around $65,000 during the same time frame. Again, mostly administrative. A really important detail is that this report covers the period up to the 30th of September 2025. The actual business combination closed on the 8th of December 2025, which is after the period this report covers. This means the financial statements here don't yet reflect the combined entity's full operations or the impact of all that capital they raised immediately after the merger. They're presenting the situation right before everything truly came together. So here is the breakdown. 21 Capital Incorporated is a company that is essentially being built through a complex merger. Heavily invested in Bitcoin. They've raised a huge amount of money, which is great. However, the successor entity itself, 21 Capital Incorporated, had no cash and significant doubt about its ability to continue as a going concern as of the 30th of September 2025. This is a common situation in SPACs or reverse mergers, where the shell company has little to no assets before the deal closes. The real operational history and cash are in the predecessor, 21 Assets LLC, which did have cash and positive working capital, but was also burning through money to get operations started. The company's entire future hinges on the price of Bitcoin and navigating the regulatory landscape. Their strategy relies on educating people about Bitcoin and then offering financial services built around it. It is a bold, high-risk, high-reward strategy directly tied to the price of a single digital asset. If Bitcoin thrives and regulations are favorable, they could benefit immensely. If Bitcoin falters or regulations tighten, they'll be in serious trouble. The sheer amount of capital raised gives them a runway, but the reliance on Bitcoin's price is a major wild card. Alright, that is our deep dive into 21 Capital Incorporated's latest filing. What is your take on this Bitcoin centric strategy and the financial position as of September? Let me know your thoughts in the comments below. If you found this breakdown valuable, please give it a thumbs up and subscribe for more corporate explorations. And don't forget to join our Discord community for deeper discussions. The link is in the description. Thanks for watching, and I'll see you in the next one.